This is the MTPredictor weekly update for January 17th, and it happens to be Martin Luther King Day here in the States. And so just a quick update tonight. Here's the weekly chart of the Dow again. I just wanted to show, currently we've got this 5-wave pattern up. Again, this is our typical wave 5 resistance area here. Haven't gotten up there, but again, there's our 12,000 area right in the middle of that typical wave 5 resistance. I think that's the area the market is wanting to head to. That 12,000 is so close. As I said a number of weeks ago, that would be kind of the next target for the market, and we've been slowly kind of working our way up there. 11,787 in the Dow now, and so we'll see if they can't continue to push that. We've got earnings season ahead now, and so again, we expected that the market would drift higher into earnings season, and then we'll see what happens if we get up into this 12,000 area in the Dow. We'll see if that does hold as some resistance before we get a correction. As you can see, we have this 5-wave pattern up here off of this was again the most significant low in 2010, and that was coming off this 5-wave pattern, which was the most significant low, obviously, of 2009. So we have a 5-wave pattern up with a little correction followed by a secondary 5-wave pattern up. If you go back to our all-time highs, let me go back here, you'll see we had this 5-wave pattern up followed by a secondary 5-wave pattern up before we hit our all-time high in the Dow up there at 14,198. That was right into this minimum wave 5 resistance, the second 5-wave pattern up that year. So we've got a similar situation with this first 5-wave pattern up followed by a little correction, and then the secondary 5-wave pattern up. So we'll see, we'll get into this 12,000 area, what that looks like. And next, let's just take a look at commodities and kind of give you an update on these. Here was the gold trade. We had the short in gold. That was a nice 4-to-1 risk-reward trade that followed up by this TS4 to the long side, back with the bigger trend there. And this one has not stopped out yet, but we haven't got to that 100% initial risk line there. So this would be the first trade, if it does stop out in a while, that gold didn't follow a very nice pattern there. So we'll have to see if there's more downside. The other thing is our STF here. You see the STF oscillator has come down into this gray line, and that's telling us there may be more downside ahead. So we may have more correction in gold coming. Oil, this DP again was at the wave 5 up, so it was a better area to get short than the DP that was at the wave 3 up, because you're only expecting the short correction. But and this 5-wave pattern was not really off a significant low or anything like that, so it wasn't a real strong pattern there. And this one had about almost a 4-to-1. Now that hasn't stopped out yet, but it did hit that 100% initial risk line. So we talk about on the daily charts moving your stop to break even once you get to this 100% initial risk line. So your break even trade there, we'll see if the original stop there at 92.59 in oil will hold, and it'll come back down. As if gold also heads lower, we'll see. Anyway, hope that helps, and we'll do it again next week.